again, those are, yeah, Sequoia and Kleiner, you basically have no chance for the most part.
So Vic, let me go back to you. So Sequoia, Anderson, let's say Kleiner, I want in. I've got $100 million in my family office. What are some of the steps, as Ron was alluding to get into these funds or at least get close?
So again, those are, yeah, Sequoia and Kleiner, you basically have no chance for the most part. There's a new organization called Allocate, which is basically kind of like how Moonfair was for PE, and there's Case and I Capital allowing access to, tier one names and alts to RIAs. The other thing I'll say is, look, like, yes, probably 80% of the returns in venture, probably maybe even higher, accrue to the top 10% of the firms. But there are other great firms too, Greylock, Excel, this, that, and the other. So, the asset class has grown. And maybe to answer one of the things that you had brought up previously is, a few years ago, we saw our first $1 trillion company. Now we have $2 and $3 trillion companies. Microsoft, Apple, Google, NVIDIA, Facebook is getting close, and Meta. I mean, now, like when you're underwriting an early stage company, you're like, okay, like you would never say this could be $1 trillion company, but like the ceiling on how big companies can get an exit for is, continues to go up. And so that's why if you can underwrite to larger and larger outcomes, you need more and more capital, especially if these companies stay private longer. And so, to defend your ownership and to keep going, and also just take a lot more shots on goal. Now it's like, look, you need capital for, you need to take a lot of shots on goal. You need a bunch of reserves to, to defend your ownership.